Welcome back to Power Lunch. The social stocks are heading lower again as part of the broader tech sell-off. Twitter, Snap, and Pinterest are all around 30% down from their 52-week highs. Are any of these social plays a buy here? Nancy Tangler of Laffer Tangler Investments and Bill Baruch of Blue Line Capital are our Trading Nation team today. Welcome, and it's great to see you both. Nancy, I'll start with you. Which of these names, if any, would you buy?
Kelly, welcome back. It's good to see you. I would pick Facebook out of that list. We have exited Twitter and Facebook for the following reasons. Though I have a tortured relationship with this management team, there's been some high-profile missteps, regulatory concerns. You can't argue with the business model. Digital advertising is expected to be about 51% of total advertising. Facebook and Google get the lion's share of that. Average daily average users are up to almost 1.9 billion. Up quarter over quarter. Average revenue per user rose again in the fourth quarter. And then valuation. You've got a company that's growing at 20%, revenues expected to grow, earnings again at 20%. It's trading at a 26 multiple. So I think you use the weakness or the sort of lack of movement in the stock over the last 6 months as an opportunity to enter. And so we still own it, but we don't own it in our 12 best ideas portfolio for the reasons I've articulated.
Okay, so still would pick up Facebook, Nancy would. Bill, what about you of the social names that have been trading sideways or worse?
We have a social divergence on our hands, and Twitter is getting the bad end of the stick here. I own Twitter, and we cut it half in half up through the February rally. And this would typically be where I'd be looking to buy that half back. And there's a lot of support down here from the March 2020 lows. This is a big trend line. But overall, I'm less enthusiastic about the market. And I think for the first half of May, we're going to digest April's gains. And 4186 in the S&P was a big level for me. And I think the market is just kind of working through this. With all that said, Twitter's earnings were really unenthusiastic as well. And not so much because of the numbers themselves, but it was relative to Facebook and Google. And I think really, I own Google, but I think we would be looking to buy Facebook instead of Twitter now on some weakness. Facebook's a relatively cheap stock, and there's a lot of support at Facebook's moving into. I think the 285 area, you got a lot of technical levels that align there. So if the broader market has some choppiness, we digest April's gains, I think Facebook would be the better buy as we work our way through the month of May.
Both going for Facebook, not opting for some of the smaller ones. I'll go unmentioned. Nancy and Bill, thank you so much.